Why is it that on the 13th of April this year, literally everyone who had bought Bitcoin in the past was in profit, yet so many people have made losses on their crypto investments or did not take profit when they should have? In this video, I want to discuss with you how to avoid such a situation by laying out the best strategies that you can use today in order to maximize your return on your crypto investment. Before we jump in, just a quick disclaimer that I'm not a financial advisor. Invest at your own risk. Now, many of you already know that the crypto market is highly volatile compared to the stock market. In order to mentally handle the price swings, you need to have a solid strategy from the start. So which strategies can you use to maximize the return of your investment? First, before you do any investment in anything, get familiar what it is you're actually buying. For example, do you already know what blockchain technology is? What is the use case of the cryptocurrency you want to invest in? How long has the coin been around for? What is the roadmap and the team behind the coin? If you cannot answer these questions, you should not invest in any coin at all. Imagine you invest into a cryptocurrency you do not know anything about. One day later, the price drops with 20%. Are you going to panic sell? Most of us, yes. Simply because we do not understand the economics of the cryptocurrency and cannot evaluate ourselves whether the price will ever go up again. Do not just follow the investment of some random YouTuber out there. I know a lot of YouTubers that sound very convincing why you should invest into XYZ, but that should not influence your own investment in any way. Being educated on what you bought will help you tremendously on the long term. And guys, I would recommend to just write down these strategies so you will stick to them and not forget what you should do. Now, moving on to the second point, diversify. Do not put all your money into one single cryptocurrency. Diversification will reduce the impact that volatility in any one asset will have on your portfolio. If one cryptocurrency crashes, your other investments will be performing differently. Some may be holding their value and some may be rising. However, you should know that almost every cryptocurrency will be influenced by the price of Bitcoin. No matter how good a project is, if Bitcoin drops 10% in price, the other coins will follow. Bitcoin is regarded as a relatively the most reliable coin out there just because it has stand the test of time. That does not necessarily mean that you should invest solely into Bitcoin. Maybe other coins have higher upside potential, but that again depends on the risk you are willing to take and your understanding of the coin. Generally speaking, the lower the market capitalization of a coin, the greater the risk is and the potential return. Now, this brings me to the third strategy, which is only invest what you can afford to lose. You might have heard this 1,000 times already, but if you do not have this mindset, it will become very difficult to become profitable. Ask yourself, if I invest X amount of money today, how much of an impact would have this on my life if I lose it all? Can I pay my bills without touching my investment? If you cannot afford to lose the money, it is very likely that you will be heavily influenced by the price swings, which is occurring almost every day on the crypto market. You are going to sell on the worst possible moments, as emotions will creep up on you when the price drops. With your investments, you want to stay rational at all times. You are more likely to be profitable in your investments when you can turn off your emotions. Now, don't get me wrong, this is not easy, but it will be much easier when you do not have to worry about sudden drops in prices. Fourth, don't even try to time the market. Instead, use a dollar cost averaging strategy. This strategy is proven to work for the most of us. The goal here is to invest over the time instead of all at once. It is designed to help offset any negative effect of an investment caused by short-term market volatility. If you're new to investing, you will never buy at the bottom and sell at the top. I hate to break this to you. You will always buy and sell somewhere between it. If you try to time the market, it will end you in staying on the sidelines and never put your investment in the first place. During a price drop, you might think, oh, it must go lower. I will wait before I enter. On the other hand, during a price increase, you might think, oh, we must be near the top. I will wait for the next drop in price. The beauty of the dollar cost averaging strategy is that you simply hedge your bets. Fast price movements won't affect you as much as you average your investments by spreading it over time. This is the way to do it if you want a relatively safe way of entering the market. You do not want to invest all your money at once. Keep some cash on the side that you can use when there's a discount on the market and then enter your position. Moving on to the next strategy, which is holding with an exit plan. Now, there are profitable day traders out there, but quite often it is the case that holding a crypto asset you purchased for the longer term is more profitable than doing swing trades, simply because you cannot time the market or you're not experienced with any technical analysis. Holding your crypto for the longer term most likely leads to a higher profitability. This has been proven time after time. Look at Bitcoin. Let's say you bought Bitcoin at the top in 2017, which was then at the price of $19,500 US. Literally a very unfortunate entry point at that time. Or is it? Had you just held your Bitcoin until recently, you would be in significant profits. This is just the power of simply holding your investment. It's the simplest and easiest strategy to do. This does not mean that you should hold forever. Someday you want to take some profits. This is why you need an exit strategy. Now, this may look different for each of us and is highly dependent how much risk you are willing to take. First, determine for yourself how long do you want to hold the crypto asset. Is it 1, 2, or 5 years or even longer? The second thing to do is to determine when you want to sell and how much you want to sell. For example, you step out your investment in steps each time a goal that you set up is reached. This goal may be, for example, a price increase of 20%, 30%, or 50%. And once this goal is reached, you take out a portion of your investment. So to bring this more in perspective, let's take Bitcoin, and we bought Bitcoin at the price of $30,000 US. Now, the exit strategy you use, for example, is to sell 20% of your investment every time Bitcoin increases with 20% in price. So once Bitcoin reaches a price of $36,000 US, which is 20% higher than your initial investment, you will sell 20%, which is $7,200. And you continue to step out like this every time there's a price increase. The sixth strategy is maybe the most important of all, which is do not panic sell. When our lives evolve around money for survival, it is completely natural to panic when our investment becomes in danger of losing lots of value. Some investors are more prone to this than others. Now, what you can do to not fall for the panic sell is just to not look at the crypto market every minute. Just put your phone away, don't even consider looking every hour. So it does not matter what the price today or tomorrow is. See the bigger picture. Market corrections and volatility are a normal part of investing. The price does not go up in a straight line. A lower market price is just an opportunity to enter your position at a discount. Remember our dollar cost averaging strategy we discussed? And secondly, what did we learn, for example, about the financial crisis of 2008? The markets will recover. Investors who kept their heads and started investing during this crisis made it out the best of all. This is a perfect example and why you should become also emotionless when you invest in order to become the most profitable of all. I'm sure when using all these strategies together, you have a very high likelihood to succeed and generate great returns on your investment. However, let me tell you that you will need a lot of discipline in staying true to your strategies. For some, it might be good to write it down on a piece of paper just to remind you what to do in case of market volatility so you don't stress out. This will avoid you in making irrational decisions by remembering to see the bigger picture and the reason why you invested in the first place. I hope you liked the video and gained some useful strategies to become more profitable. I would appreciate if you would leave a like or consider subscribing to my channel. See you in the next video.